Hey everyone, on this week's Rockstar Minutes, we have Steve Jager all the way from the West Coast with us here. And the reason we have him here is because apparently you can invest in real estate right across the country, including Toronto, for $1. And when we first saw that from you, I think now, we know you've been on the podcast and we know that this is the truth. But when you first see that, you don't believe it. So for anyone who has not been exposed to Addy yet, can you just explain before we get into the Toronto projects that you're about to release? I know there's a Toronto one and another one just around the lake here. Before we get into those, can you just explain Addy and how it works and how it came to be?
Yeah, for sure. Thanks again for having me on. Addy is, if you go to addyinvest.com, it's ADDY. We're basically an online investment platform that enables the crowd to invest in real estate for as little as $1. So people can choose a property that they like that comes onto our platform. They can invest $1 up to $1,500 per property and partake in the benefits of owning that property along with, generally hundreds, now thousands of other people.
And the thing that freaks me out about you guys is you literally cap it at $1,500. So why the cap? Can you just explain that? Because I think that's an important part of your story.
Yeah, so the cap is there so we can get as many people as possible into a property. Our goal is to break down barriers to entry. And so we don't want to put a property on the platform and have a handful of accredited investors come in with, $100,000, $500,000 slices and take up a whole property themselves. That's not really what we're up to. The goal is to enable all Canadians to be able to invest in real estate and take part in these deals. And that's why we cap it at $1,500. We do allow accredited investors. It is definitely worth saying we do allow accredited investors into the system and they can put larger dollar amounts in. But the reason we let them in is to help our crowd, because sometimes deals come our way that the minimum investment from Addy itself going in is $2 million or $5 million. And we'll turn it down because we didn't think our crowd was maybe big enough or able to take that size down. So now we've let accredited investors in, which helps us bring more opportunities to the crowd. So we still restrict the accredited investor and we're kind of using them to enable the crowd to get into opportunities that we would have normally turned down.
Yeah. Yeah, you're totally breaking down the barriers to get into real estate. I was just texting with a friend of mine who was just talking about our kids and how are they going to buy property and how are they going to invest in property. Like you're serving that niche that is on everyone's mind right now. So kudos to you guys. It's awesome. And so the Toronto, tell us about what's going on in or the next projects that are coming up. I know you have always stuff on the go, but what's next?
Yeah. So we're going to launch 50 plus properties this year onto the platform. When we bring a property on the platform, we don't just bring a property on the platform and let the crowd invest in. We are invested in the property as well. We're the largest investor as far as the Addy side of it is concerned. We're the largest investor in the deal. And then the crowd can participate with us. So we are kind of putting our money where our mouth is as far as each of these opportunities. We are there shoulder to shoulder with the crowd. The next property coming on, so we just sold out a Calgary commercial complex yesterday. The next one coming on is a North Vancouver multifamily apartment building that's just across the water here in North Vancouver. It's a 22-unit apartment building that people are going to be able to invest in. Following that, we've got a Toronto multifamily opportunity coming. We've got a St. Catharines development opportunity coming. We've got a Kelowna townhouse development opportunity coming. We've got another downtown Vancouver opportunity coming. So there's lots and lots of properties that are in the works and going through our due diligence process to become available to our crowd to be able to invest in them. So people can literally go to the website, go to addyinvest.com. You can create an account. And then you can see these properties as they come on and literally choose to invest as little as $1 or $1,500 or whatever you want, $50 into a property. It's very exciting. The feedback we get is amazing. The last one we did, the Calgary property, like I said, sold out yesterday. We have 1,141 investors in that property. It's fun.
Awesome.
It's cool.
Well, it's kind of cool because you can take a bunch of cash and say, I own property in all across Canada. Right? Because you can make these investments across Canada. What would be so just to outline best case, worst case situation. So best case is you're participating in what? Because you mentioned the St. Catharines one would be a development project. So is that something where you're investing and then you get no return until it's all sold and then you participate in the profit? And are the other ones the same?
So it's a good question. Each property is different. So when we put a property on the platform, there is an offering memorandum that accompanies it. And the offering memorandum breaks down the opportunity, the investment thesis, the plan, the general plan from the general partner, the risks involved. And then the crowd can make their decision and make an investment decision. Some people choose, I don't like Calgary, or I'm not bullish on Calgary, and they just opt to not invest. Other people, obviously chose to. So it really depends. But that's, I think, the neat thing is people can pick and choose the properties that they like and the opportunities they like. As far as the risks, some of them are cash flowing brand new properties. Like the Starbucks property that we put on the platform was a Chilliwack commercial building, brand new, built for Starbucks Canada. Has a drive-through, been operating through the pandemic, and so people could invest in this cash flowing property, and distributions will come out of that one quarterly for all the investors that take part of it. The development is an example. Developments generally, you put your money in and you're not getting anything back until the capital gain at the very end, if there is any. And again, depends on the property. Developments are higher risk than buying into a built cash flowing tenanted property. So each property definitely comes with risks associated with it. And like I said, in the offering memorandum, we break down the opportunity, the thesis, what's the expected term. Each one, it could be a 3-year estimated term, 5 years, 10 years, really depends on the property and the plan for that specific property.
Sure. And I guess things can change. I'm just thinking out loud here. So if I pick on the development project as an example, maybe you invest into it, the development doesn't proceed as fast as you want. You guys sell the property midway through the development, and there's maybe less profit than you anticipated, or maybe more. Like maybe land prices go up, another developer comes in and buys it. So the initial intent of how you're going to profit from the project could change midstream. Could that happen as well?
Potentially. So the general partner is in charge of each property. So when you're investing, you're choosing not only the city that you're investing in, the property type, is it commercial, industrial, residential, multifamily, whatever. And then also the general partner definitely matters. Who they are, what they do, what's their track record, what's their plan. Do you believe that their plan is going to work? But they, at the end of the day, have control of the decisions that are going on within that property. They're kind of driving the bus, and us as the financial investor, we're on the bus. So yes, there's, you could invest in a property that's supposed to be a 5-year, and you might get out in a year because zoning changed and someone offered to buy it and it just sold and the developer didn't do anything. That may happen. Or the reverse of that, where you're expected to be in for 5 years and the market changes and they decide, we're not selling right now, we're going to hold for an additional year or 2 year or whatever. And so the GP, obviously, in our case, we make sure our GP is involved in the deal financially as well. It's part of our due diligence. So that we're all shoulder to shoulder in the deal, and the GP is obviously incentivized to make the best decisions for the property so that their investors, us included, make money.
Yeah, I can just see where this stuff's headed with you guys. And I'm sure you guys have some great long-term plans too. We don't have to get into it now, but just with technology and you guys doing more and more volume, you can really see where you're going to make it easy for people to invest in small projects with different amounts of money. Not small projects, some of these are big projects, but really easily. And we can talk about that we can talk about that stuff another time, but I know you now enough to know that this is on your mind, that there's some tech stuff happening or could happen with this. Anyway, I'll just leave it vague like that for now. But I just do want to call out kind of the worst case situation. So the worst case situation is you buy into a project, you think it's going to cash flow. It doesn't generate the cash flow that you thought it was going to generate. Your returns are not quite what you expected, but you still have the piece of real estate. Maybe the real estate's sold because it's underperforming and you'll participate in that. Maybe you could lose some money on that potentially as well. So there's both sides. It's real estate. There's the upside and there's the downside, but hopefully with the partners that you're choosing and your own expertise, you're accounting for that before you're going in and you're picking good projects. I just want to call that side out of it as well.
Yeah. The due diligence on a property is super important. So we have a very rigorous process that we go through when we dig into the due diligence. We're digging through everything, the environmentals, the appraisals, all the documentation for a specific property. But I think you're right. Like a global pandemic breaking out, if you were looking from 2019, a lot of properties would look amazing and all the fundamentals are there. And then a global pandemic that breaks out once every 100 years that nobody was really expecting changed the opportunity for a whole bunch of properties. A whole bunch of properties are now totally different outlook than they were pre-pandemic, right? If you had a strip mall with a handful of pubs or certain businesses that struggle through a pandemic, right? Or if you have a strip mall that's got a grocery store, a liquor store, and a drugstore, you're kind of hitting the trifecta there.
Yeah,
and
totally.
Those businesses are always open. They're deemed essential. And so you're good. And so, yes, there's definitely risk in properties and investing in properties and what goes on in cities, in tax changes and all that stuff. So people need to definitely take that into account when they're making their investment decision. But I think one of the things that's fun about what we do is we expose so much of this stuff to the crowd so that they can get into it, read the due diligence, read the offering memorandum, see some of this stuff, and be able to make their own mind for what they're interested in investing for that specific property. And they're choosing that specific property. It's not like a REIT where you're getting a basket of properties across the country. You're either in on North Vancouver, that specific address, or you're not, or you're in on this Toronto one that's coming, or you're not.
Or not,
and that
yeah.
like, that's awesome. It's like, yeah, you get to pick and choose.
Well, and if you had $3,000 to invest, you could diversify. You could say, hey, I'll take something in British Columbia. I'll take something in Alberta. I'll take something in Ontario. I'm just shocked that you guys from the West Coast are doing stuff in Toronto. I mean, I know Canadian politics. I'm just surprised you guys are coming this way. So it's good to see. It's good to see. Now, Nick and I want to come. We got to come out. Yeah, we have some friends out there. We got to come out that way and just bother you at some point. But so the steps are go to addyinvest.com. You make an account. When you make an account, you can see the details of the different current opportunities. Then you can decide if you want to participate in one or not. Correct?
Yes. Yeah. You make the account. It's Addy Invest, ADDY, invest.com. Yeah, create the account. You can move money over to your Addy wallet through EFT or Interact. So you can fund your wallet, and then you can sit and watch the properties come on and make an investment decision. It's worth saying, I think, that we charge no fees. So there's no fee, there's no transaction fee, there's no lift on the property. We are pari passu with the crowd. We're shoulder to shoulder in these deals with them. We make money in the same way that they do on the property. Which means Addy's not really making any money at this moment. What we are about to do is we're going to roll out a membership model. So people will pay a very small annual fee. So think like Costco, but less of a fee. A small annual fee that will give them access to be on the platform and provide us with a revenue stream, as well as enable them to be able to make investments into these, like I said, 50 plus properties are coming on the platform this year.
Yeah, awesome, man. Pumped for you guys. If you listen to our podcast called the Your Life, Your Term Show, Steve was on episode 149. So if you go to rockstarinnercircle.com/podcast, you can listen to more about Steve explaining Addy's beginnings at episode 149. Mike Stevenson was on. That's your partner in this, correct?
Yes.
On episode 170. So episode 149 and 170. We'll actually put links to this in the description. If you're watching this on YouTube, it'll be on the links to the description.
You also had Jeff Booth on, right?
That's how we had Jeff Booth on. Yeah, How am I
chairman?
Jeff Booth.
Our chairperson.
You're right. Jeff who? Jeff. Yeah, Jeff.
The original connection.
Yeah, that's right. Jeff Booth's been on, and Jeff's been back on the podcast. He always blows me away, with his thinking. And the last kind of big breakthrough for me was that a combination of real estate, and talking to him, I was like, a combination of real estate and Bitcoin. Like if you have some real estate investments, you're participating in some kind of land, you're participating in some cash flow components and some of this, Bitcoin. It's kind of like having one foot in the existing current financial world, and Bitcoin is like an option into the future. And it's just a beautiful combo. So that his conversation really made that clear for me. But yeah, Jeff Booth has been on the podcast multiple times for sure. And your Twitter handle is SJagger. So that's SJAGGER if you want to find Steve on Twitter. Steve, anything else?
No, that's amazing. I appreciate the opportunity to chat with you and to chat about what we're doing with Addy. We're very excited to continue breaking down barriers to let people invest in real estate.
Yeah.
It's fun.
Yeah. We're pumped to be able to share it. So thanks for that. Thanks, Steve.
Thank you.